This is your third acquisition in a matter of 3 months. So why now, and how much more firepower do you have to do more deals, frankly, after this?
Great to be here, and thank you, and particularly at this moment. The Atalaya investment is really a strategically critical one, alongside, as you note, a couple of other critical transactions that we've completed, all of which together are about positioning Blue Owl to be the full service provider, full spectrum provider across the private credit marketplace. And that's really what Atalaya is, an extraordinary franchise, a couple decades old now, in this now very focused market of alternative credit or asset-backed credit.
How big is that asset-backed lending opportunity? Because everywhere we go across Wall Street, you see more and more private credit managers diving in.
It's a very big market, and there's a lot of similarities to what private credit, private corporate credit looked like just about 10 years ago when we started Blue Owl, Owl Rock, and a chance to really take an asset class, and we see the opportunity going forward in alternative credit to be analogous to and possibly bigger than the opportunity in corporate credit. The marketplace for asset-backed credit is about $7 trillion. So just mathematically, it is bigger than the syndicated loan market, if we think about that as a proxy for the marketplace for direct lending. So I think it is both a bigger market, and we're also at a time where investors have a greater appreciation and understanding for the benefits of investing in private credit solutions, which people have learned, I think, very well through the success investors have had over the last 10 years on the corporate credit side.
Let's talk about the price tag. So you're paying $450 million up front. You're getting about $10 billion, a little bit more of that in AUM. How did you get comfortable with that 4 to 5% figure of AUM?
So for us, in acquiring a business like this, just like in everything we do in our business, it's a bottoms-up calculation. So, at the end of the day, the measure you used, certainly ultimately a touch point, but for us, it's about the fundamentals, and we look at Atalaya. Again, this is a company, they're on their 9th flagship fund in alternative credit. Maybe a hot topic on Wall Street today. It's been a 20-year topic for Ivan Zinn and his partners. So we look and we see an opportunity both on the basic organic growth of Atalaya, but also the combination. When you bring together the credit capabilities, including some asset-backed capabilities we have at Blue Owl, marry them with Atalaya, we see a tremendous amount of growth because we can deliver a product that will deliver great risk-adjusted returns for investors. So the fundamentals to us are appealing. I might harken back, and this is something Bloomberg covered and reported on at the time when we acquired Oak Street. Now the real estate business of Blue Owl, actually very similar in size, had about $10 billion in assets. Today that business is approaching $30 billion in assets. Run, again, very similarly. Mark Czar, a spectacular entrepreneur. We've become the market leader in triple net lease. We've now added a real estate finance capability in Prima. When we now complete the picture by adding Atalaya, we have the full range of credit capabilities to meet the moment.
Let's talk about also how many employees you're adding. Roughly 115, I believe. That brings your headcount to almost 1,000. With all these acquisitions that you're doing, all this onboarding, I mean, how do you maintain a cohesive culture?
Such a spectacular question. Culture is monumentally important to us and monumentally important to the future of our business. We have these tenets that underpin everything we think about at the firm. And it's a firm for us that's built around mutual respect. It's built around constructive dialogue, excellence, one team. These are themes we talk about a lot. Atalaya has that culture. Atalaya has a strong culture, a strong cohesive culture. The team's been together a long time, and they too are all about excellence. And they have skills on top of those cultural attributes that blend with us well. And we look at that actually first. We have to find a cultural blend before we can sort of get on to the business fit. But the cultural blend is there, and the business opportunity, their skills, they've got a data science team that really knows how to mine. It is a different adjacent business to corporate lending when you're dealing with the millions of data points available in consumer and commercial credit. So really going to be a powerful combination in our view.
Why are banks giving up so much business to alternative asset firms like yours? Why isn't Jamie Dimon saying, like, I'm taking this back?
So I wouldn't presume to speak for Jamie Dimon.
I don't mean specifically
No,
Jamie
no,
Dimon.
of course, I understand. But I would say this. I think that much like corporate credit, it's not so much the banks giving up as much as we're presenting a solution that's so fundamentally different for the user. So if we think about any of these types of financings, when we talk about the bank market, it's a very transactional market. It's about, look at its simplest form, a bank has one-day assets that they're using for long-dated lending, right? Deposits can be called anytime. We saw that with Silicon Valley Bank. The heart of Blue Owl, the heart of private credit, is something as straightforward as this. Look, if you're going to make long-term commitments of capital, then you ought to have long-term commitments of capital to you to match them with. Duration matching is the secret to stability.
How much is the originator of these loans changing? Because you looked, for example, at Bank of America this morning, the average FICO score for a car loan is above 800. Most of America does not have a FICO score above 800. So when you're thinking about these asset-based loans and where they're even generated from, where are they coming from?
A really good question, because we are seeing, of course, with fintech broadly defined, but financial innovation, a lot of new channels where these products are being originated very successfully using technology to support that.
Of the world.
Absolutely. And in fact, Lending Club has been a partner as the bank market has retreated from providing a lot of this financing. Perfect study. Lending Club has been a partner to Atalaya. Atalaya has done $1 billion of financing for Lending Club. Lending Club originates consumer credit, but they're not a balance sheet business. So once again, you have the originators, or you have people who transact, and then you have to have the people who are really going to hold and manage that risk for the benefit of investors.
Marc, your stock has more than doubled since 2022. How important is your stock price to you?
Very. So we're very focused on driving our stock price.
Shonali mentions actually that you're worth now $10 billion more than Carlyle, which is a big market cap.
We have been very fortunate to be able to position our business in a place where both growth is substantial, private credit, this real estate arena that we're in, is very high growth. So that's our highest growth business, is our real estate business. So we've been able to position in places, markets where there's a lot of growth, and then build a business model that's about durability and predictability. Our business, our revenues are almost all fee-based, and our capital is very heavily tipped toward permanent capital. Over 90% of our revenues come from permanent capital sources. So I think the stock reflects that we've got a different model. It's higher growth, it's more durable, it's more predictable. We intend to keep it that way. And frankly, businesses like Atalaya and this $7 trillion addressable market give us the tools to go beyond 2025, and a year we've talked a lot about with the marketplace, into the back half of post-2025, and really continue to grow and drive our business and our stock price.